Hey, good day, everybody. Welcome to the Deal Scout. On today's show, we're going to talk with Mr. Michael from Boston. Michael, welcome to the show.
Thank you very much, Josh.
Yeah, man. So you and I are hanging out. We're at a coffee shop or eating Boston donuts, or we're at a bar, and someone comes up and they go, "Oh, hey, Michael. Who are you and what do you do?" How do you typically respond to that?
Well, if it's past midnight and female, there might be a different response. Right? So let's just
Gotcha.
assume that it's midday.
Yeah.
So it's Michael Garrity, and the name of our company is Real Estate Finance Boston. And I'm going to give myself a shameless plug. It's rf-boston.com. We're a lending company, and we provide capital for real estate investors. Pretty local, mostly in the Boston area, though we just recently trying to open shop down in Florida in your neck of the woods. Providing capital to people like myself, real estate professionals that are looking to do fix and flip, which is pretty common. I think a lot of people are in the fix and flip game today's world. Bridge loans, I call that kind of parachute lending, where somebody is buying a property, not necessarily for a fix and flip, though it could be, and they have bank financing or some sort of cheaper capital lined up. The week before the closing, the bank for some reason throws a curveball into that capital source, and then the borrower reaches out to us, and we close the loan, and then probably no construction. They go back to the bank and take us out in a few months. And then the fix and flip stuff is more of the borrower borrows the money, we give them the money for construction, they fix up the property, hopefully sell it for profit. And yeah, I think that's about it.
Yeah, but okay, with parachute money, when do deals ever go
By the way,
wrong?
I just so you know, I made up the parachute so it's not going to be common, but I think I like it.
Yeah, I like it. So with parachute money, if a bank commits to something, they never back out and deals never go south. So why, give us an example of why that would happen, right? So here I am doing a fix and flip project, maybe I bought a duplex. Are we doing residential or commercial? Where do you put your money?
Everything. Real estate backed lending. So
Okay.
most of the stuff is residential, but
Okay.
either one.
Okay, so I'm doing a residential deal, fix and flip. The bank says, yeah, it's my buddy down at the local bank, and then they pull out. Why would they do that? What could go wrong in a deal where someone needs to call you up and go, hey, Mike, I need some help. I need some parachute money. I like that, parachute money. I need some parachute money. My deal went south. Give me an example of when that could happen.
Well, I think it can happen probably for a lot of different reasons. It might be because of the borrower. So we're a little bit different than a bank. We would like to see the borrower have done a couple fix and flips or have some knowledge. We'd like to see the borrower have enough money to at least have the down payment money and something to start the job, but we're not going to get deep into their finances. We're not going to collect taxes. We're not FICO dependent. We may or may not do an appraisal on the property. We will probably do some sort of a construction budget with the borrower, but if the borrower were flexible to what they want to do and try to cater to the borrower. I was a borrower for years, and then I was really never very good at managing job sites. I was actually terrible, and so I thought to I got to get something different. So the lenders were making a lot of money, so that's how I got into lending. But to answer your question, just there's the appraisal may not come in where the appraisal needs to come in. The borrower might have a credit blip. The borrower may have taxes where they did 4 flips the year before. They have $200,000 in the bank account, but somehow their taxes show they took a $30,000 loss the year before. So I'll give you an example. Probably not the best one because it's a unique one, but it was a friend of mine, and he was buying a warehouse that was it was like 50,000 square foot warehouse, all refrigeration, and the company in there was a fish processing. They bought the fish, they packaged it up for all the big fish companies and sent it out. They were paying a huge rent. It was a great deal for him. A week before the closing, now he was paying $3-4 million or whatever he was for this place. The week before the closing, the bank said, we still want to do the deal. we just need you to come up with an extra $700,000. And so now he's mad scramble trying to find $700,000. And I just said, hey, Brad, why don't I just give you a bridge loan? I'll fund to whatever you need me to fund at. You got to make it worth my while, right? He's going to pay 10% interest on it. And then the day we close, you go back to that. You can go to 10 different banks and get the best leverage that you can get and the best deal you can get. And this way you don't lose the deal and you don't have to borrow. Borrowing $700,000, really, that's the equity part. There's no collateral there. So it's a tough lift for the borrower.
Yeah. So you're able to do that, save the deal, deploy in a parachute and rescue the deal. And then you became everybody's best buddy.
Yes. Now, can we always do that? Usually. And we've done it in 24 hours. I think that one we did in 2 weeks. It was a pretty big loan. But yeah, we can do that in as little as a week, because typically in that situation, the borrower already has title run, they have an appraisal. It's easy for us to come in and just fund the deal.
Yeah. So you mentioned, interest rates and in the world of, private lending, hard money, and, this quick money, parachute money, kind of like paint the picture. If people go, I'm used to traditional banks, right? I'm used to working with a bank where it's like, here's a 30-year mortgage, a 15-year mortgage, a construction mortgage, right? I'm used to these kind of things, but I've never really played in the world of, private money, hard money, these kind of funds. Like, how does that work? And how do you explain that to a newbie?
Well, I would explain first off and say, if you are using bank money and you're happy with bank money, you should stick with bank money, because bank money is much cheaper than we are. So what's the benefit to the borrower? If they're going to go to a local bank here and get on a short-term construction loan, they're going to get maybe 5.5 and pay about a half point. And we're going to be at, say, somewhere between 8 and 10, depending whether it's a residential, commercial asset, ground up, et cetera. And they're probably going to pay 2 points. So they could be paying up to like double the interest for us than with a commercial or conventional bank. So why? So the number one reason is speed. So in today's market, I think speed. Well, I think in today's market, anything that you can do to make your offer better than someone else's offer, to some degree, you almost have to do it, right? Because deal flow is so hard. It is. Now, when you put it on the market, you sell it, it might sell in 24 hours, which is great. But when you're trying to buy that property, that seller knows how hot the market is. So you present an offer that says, close in 30 days. Here's my pre-approval letter from a bank, and I'm putting 20% down. Okay, that's nice. The next guy comes up and says, I'll close in 2 weeks. I'll put up $50,000 non-refundable, and I'm cash. I have no financing, nothing. And the offer is the same. Who are they going to go with, right?
Yeah.
So they're going to go with the cash offer. So that's one reason, is speed. You have the parachute also, right? Well, I'm going to start with bank financing. They might call me up and say, hey, can you do the deal? Sure. Okay, well, I'm going to go to a bank, and if I can get bank financing, great. If not, I'll call you up, 2 weeks before and see if I can get in there. And then the other reason is we're just easier. So this is probably not, most of our deals are probably fix and flip. So someone's buying a 2-family and putting in new kitchens and baths and, throwing it back on the market and trying to put some money in their pocket, which is, God bless them. That's what I try to do. But an example, and this is my own example for a property that I did, I bought an 11-unit ground up permanent deal. So now I have to build it. The bank wanted me to put 20% down, or maybe 25% down, which is probably about the same as hard money, might be 15 to 20. So I'm saving a little bit of money. I don't have to put as much down on the hard money. I had to get all my taxes done. I also had to fund 12 months of interest up front. So in addition to putting 25% down, I got to stroke a check for 12 months of interest. Then the bank's like, well, the day we close, we want to see you have at least $250,000 in the bank to start the job. So there are a lot of barriers to entry to get a loan from a conventional or commercial bank. And if you have the ability to do that and you have time, I can really, there's not a whole, I mean, I'm a really cool guy. We can go out and hang out and have be friends,
Yeah.
but the value part, probably not there. So speed, number one, I think ease, less underwriting, that kind of stuff.
Yeah. Now, in the terms, the buzz terms, right? Like people hear hard money, private money, these kind of funds. Are there differentiations on what these terms are, or are they kind of under kind of a similar umbrella?
Well, let's hope that one day they're saying parachute lending too, right?
I
And then
like that.
we'll be the genesis of it.
I love that. I'm gonna actually hold back this interview so you could go down, like buyparachutemoney.com, trademark it if it's not already. Here's your head start, Michael, and we'll do it together, right? We'll do a JV together. So, but are they kind of, so parachute money, hard money, private money, are they all similar things, or are there differentiations between them?
And then I don't think hard money, private, I don't think there is. They're all the same. But I think for me personally, so I started in the real estate game as a real estate broker in 2000 in Boston, summertime. It's at August and it's so hot. These giant 4 families in downtown in the North End, no elevators, all stuck together, sweating, going out, walking downstairs, trying to get into the game. Around 2004, I did my first flip. I used hard money. Now, back then, I think the guys that I was borrowing from, and back then there were only a handful of lenders in Boston. And the attitude was, we have money, you need money, and we're in charge. And here are the terms. I think I got 14-4 on my first deal. So anybody in the game, that's 14% interest and 4 points. Where in today's world, I see 8-2, 9-2, 10-2. So it was more expensive. The lenders weren't that friendly. For me personally, I think of when someone says the word hard money lender, I think of those guys. And to me, there's a negative connotations to some degree to that. And then when someone says a private lender, I like to think of myself as a private lender, but in reality, they're kind of synonymous.
Yeah. When you hear hard money, you're thinking of a guy with an eye patch, a hook, and a baseball bat, right? You're like, whoa, this is the guy that I got to deal with. But like, in the back then, a 14-4 was kind of you need money, here you go, boys, right? But now there's a lot more competition, and there's a lot more players in the space who are lending money, private money out. And I think what that also did is it differentiated the good, the bad, and the ugly, right? So what should someone look for, right? So you already said speed, you already said ease of use, the people like you. Like, why should someone, like, what are some things that people should look for if you are standing next to another guy and both have money in their hand ready to give for a really cool fix and flip deal? Why should, what are some things that people should look for in a private lender?
Great question. So I think right off the bat, when you find somebody, I'm going a little in the future here. When you find someone you like, I would probably stick with them. And I say that because I think there are a lot of national guys kind of popping up around, and they're a little bit cheaper, but they're painful. So if you have a local guy that you like and you're working with them, I would stick with them. The grass always looks greener on the other side. That said, if you're new and you don't have a relationship, or you're disenfranchised with the current lender that you have, things that I think you should look out for is fees. Some lenders will tease you with a low rate, but then they hit you with a bunch of fees. Mm-hmm. Another huge one is, am I paying interest? Because most of these are construction loans. Am I paying interest on the construction component of the loan, whether I take it out or not? So in other words, I get a loan for $1 million, I get 500 acquisition, and I'm putting 500 into this 3-family that I'm going to turn into condos, and I'm gutting the whole thing. Huge difference in what it's going to cost you, even if whether the rate's 7% or 10%. I'm taking the 10 with only paying interest on the 500, and then as dispersed, over taking the 7 on paying the whole thing. It seems like not a big deal, and it almost seems like you don't even have to ask that question, right? But that's a big one to ask. And another thing that some of the national guys are doing is they're putting a clause in the note that says, oh, well, it's as dispersed. So that 500,000, you only pay interest on that as dispersed as you take it. But there's a clause in there saying, if you don't take it all within 6 months, we're going to whack you and start paying you on the full note after 6 months. And so really, actually, probably the most important thing that I would tell somebody, read the note. So many people don't read the promissory note. You have the promissory note and the mortgage, those two things, ask for them before you close and read them thoroughly. Read the term sheet thoroughly. Make sure you see and ask these people, well, what are the fees that I'm going to be getting into?
Yeah.
Because there's nothing worse. You're so excited to do your deal. Maybe it's a first deal, second deal, whatever. You get in the day of, you get the HUD the day of the closing, and you look and, well, like, geez, I didn't know this fee was coming. That fee was coming. You're so excited you don't read the note, and then next thing you know, 6 months later, you're getting killed in interest payments. What the lender's going to tell you? Oh, sorry, you should have read the note.
Should have read. Like we just don't. Most people. Now, I grew up on a construction site, so I feel like I'm able to say things that other people maybe not be able to say. But I grew up on a construction site. We swung hammers. We wound up building new stuff. But I grew up swinging hammers, digging ditches, post hole digger. That's where my PhD is as a post hole digger, digging holes. Right, like Dad did all the smart work. I did demo and digging. Right, that was my job. We weren't known for our business acumen. Like, this is something that I had to learn over time and such like that. So dealing with banks, dealing with, institutions, dealing with 30-page, HUD docs and promissory notes and all these things, that was something that was foreign to us and a little bit intimidating to us. Right. So what advice do you have for the fix and flipper, the construction guy out there, guys like me, maybe 15, 20 years ago, trying to get into the game, want to do this on the side, maybe 1 or 2 deals a year, maybe 5 deals a year. Like, what's some advice do you have for us to kind of simplify the process and give us some, straight shoot advice?
As far as specific in general or specific to lending?
Yeah, with when it comes to money, right? So you're an expert on the money side, on the lending side. Like, what are some things that you're like, all right, guys, if there's 3 things to look for, here are 3 things where most contractors, most fix and flippers, they watch this cool show on TV and they think that they could go flip a house or flip a property. What are 3 things that I need to look out for that can save me tons of money and tons of headache?
Interesting. Number one, I think patience is the most important thing. So the way it seems like it always works is you're looking for now deal flow is so hard right now, really hard. So a potential investor is looking for a deal, can't find. Now, when you're new to the game, for some reason, those good deals, they're around the corner, but you can never quite get to that corner to find that good deal. So you're using maybe MLS or other ways to find deals where it's just harder to find a deal. You're disenfranchised with waiting so long. You find a deal and you say, you know what, we got to get into a deal. This is not the best deal. It's not great, but let's get into the deal just to do the deal. The day that you get into that deal, then a week later, you're going to find 4 awesome deals, and you're not going to be able to do those deals. Then you're going to get angry there. You're going to bang your head against the wall. You're going to make mistakes in the beginning. It's okay. I did it for like the beginning, probably to the end. But you're going to do a deal. You're going to make probably no money or lose money because you're just going to do a deal to do it.
Yeah.
And all those other deals are going to come in. So that, I think that the first one, that's probably number one. Number 2 is who's going to do the construction for you? Are you going to do it yourself? And if you're new to the game, right? You're not an expert. Who's evaluating the construction cost for you? So when a new borrower comes, I'm a little nervous as a lender. as a person, I'm like, oh, they're new. I would love to, and they're a good person. They're asking questions and just genuinely seem like a really nice person. Like I want to hold their hand and say, let's go, we'll do this together. I'd love to help you out. But then I put my lender hat on. I'm like, ooh, new borrower. One of the toughest things I think for the new borrower is to figure out how much it's actually going to cost for the construction. So I think if you're not a general contractor, you don't have a construction background, maybe you're a business person in some sort of professional field, podcast, extraordinaire or whatever, and you want to get into the business. I think you get a friend, get a good referral for somebody that's going to do the construction. And before you do any kind of contingent offer where you're putting 20, 30, 50 grand up non-refundable, get somebody in there to really price out what the construction is going to cost for you. And then I think added to that is also the resale value. If you don't really know the market and you're counting on a real estate broker, or God forbid, even worse, a wholesaler who's telling you this is a great deal, so you're gonna pay me $25,000 more than what I'm paying for it, and you're gonna make 100 grand. It's only gonna cost you 50 here. You're gonna sell it for 450. That's the respectful to all the wholesalers, and they send me a lot of business, and I love those guys. But that's that person or a real estate broker that's going to make 2.5% on the deal when you buy it, and then 5% when you sell it. These aren't the people that I think you should be using to value your, the property and the deal. You got to be able to do that yourself or find a neutral party. And then the third one, I think if this is your first deal, it costs money. Get an attorney. Get an attorney. Have them look at your purchase and sale. Get an attorney, have them review the loan docs. Try to get an attorney that has some experience, working either, with hard money lenders or in real estate. Don't get the attorney that's like friends with your dad that does probate, right? Get somebody in real estate, totally transparent, be honest, tell them you don't know what you're doing. You need them to protect you. And if it costs you $2,500, it'll be the best $2,500 you ever spent.
Such good advice, right? So you nailed, you had so many, key points there. Look for someone who's done it, right? Especially for the first time deal maker who's like, husband and wife or whatever, right? They're like, let's do a deal together, right? Like we saw it on TV. We've watched every single episode. So we're probably experts in this. And then they go out and they find a cute house and they're like, all the houses on this road sell for 200. We could buy this one for 170, put a little bit of money and flip it for, right? So having someone who could kind of walk you through the cost of capital, the cost of renovation, all the things that could go, the cost of selling it, the cost of holding it, all these things that we miss going in. And then what happens, and this is what makes me so sad, is people, they do a deal and the first deal goes wrong. So they said, I'll never do that again. Right. And they can have such a bright future in doing deals and be, maybe even be on the show one day, maybe take over the show one day.
Think about your first podcast, right? Compared to the expert that you are now, or whatever, anything you do, or when you first drove when you were 15 and now you're a driver now.
Yeah. Yeah. That was terrible. I mean, I still screw up all the freaking time and I've done it 700 times. Right. So I think we're gonna create a few trademarks here while you and I are talking, right? So you have the parachute money, which I love, right? I love it. And then we have, I think it's called like deal dopamine, right? Where it's like people do a deal for the sake of doing a deal instead of like going, does this deal absolutely make sense? And I think a lot of people get so caught up in I've been looking forever. They're not patient. I've been looking forever. Finally, I found something. It's a little tight. I could make it work. Anytime I hear someone say I can make it work, what do you hear?
Or, you know what's even worse than that? Yeah. I get two more for you. One is, well, I got to keep my guys busy. I'm just going to do the deal. I got to keep the guys busy. I'm like, no, you're doing a deal only to make money. And the other one is, well, I'll get the experience out of it. Oof, it's not going to be a good experience. I can tell you that. Can I just jump in? Can I do a number 4 too?
Hell yeah, go for it.
You mentioned in your example, husband and wife.
Yep.
If you're anywhere near in the beginning phases of doing like a fix and flip and an investment, if you're happily married, you love your wife or vice versa, do not under any circumstances try to get into a business together and do a fix and flip together. That is just a recipe. You'll make the Kim Kardashians look like no malice. So, we'll make a rule here too.
Yeah.
You have to do 10 deals before you involve a spouse.
Why? Why, Michael? You must have seen this before.
What could possibly go wrong?
What could go wrong? I can make this work.
Oof.
My wife is incredible, Mike. You've never seen, she's incredible at colors.
Interior design. Exactly. You beat me to it.
So my wife has a superpower. Like, joking aside, she is much wiser about the value of things by far.
Sure.
Right? Like, she could see something and she goes, "Oh, that's actually a good deal." To me, I see good deals in everything. She goes, "Nah, not a good deal." So my wife has superpowers in this. It's called discernment. She has much more discernment than I do. And on people, she's like, "Oh, that guy's going to screw you." I'm like, "No, he's not. Let's move to another state and work with him."
That's a superpower. That part is a superpower. It is. Because
yeah. However, if we got into a project with her desire for it to look good because she's building it to her. Now, this is just my wife. It's not generalization of anybody else. I know I'm going to get hate mail for this. My wife will build that, like our fix and flip, to fit her and our family, not to fit the end user or the potential, investor that buys it to rent it out. That's a challenge. Do you see that challenge?
I hear that challenge. I think it not only specific to what she likes, which could work, because if she's this superpower, she probably has really good taste.
She does.
But that
she
said,
got me.
I mean, I was. But that said, you're building it for a profit. Now I'm going to get some hate mail, I think.
Me too.
You're getting it for a profit, right? So that you don't need, if you can get floors done and they're not the highest quality, but they're $6 a square foot, or you can get like this really cool hardwood floor for $9.50 a square foot. You're getting the $6 a square foot cheapest hardwood that you can get. When you get the appliances, if you're in an area that is not going to get X amount of square foot, you get the cheapest stainless steel $2,200 appliances. And if you're in an area where you can get 1,000 a square foot, you can spend 10 grand on a kitchen. So you got to know what you're doing, and you got to do it. You're doing it for profit.
Yeah.
And if you cut corners and you do things disingenuous and low quality, you're not going to last in this game. Just to put that out there too.
Yeah, it will come up again, especially so for the one time people, right? They're doing it one time and they're like, "Whoo, we got through a deal and we made $1." Right? So if something goes wrong, it may or may not come up and get you. But if you're making a business and a lifestyle where you're trying to do 2 to 3 a year, 5, for the next 20 years, the contractors, the banks, the property managers, all these people are going to go, "Oh, don't do a deal with them," or, "Hey, these are the kind of guys and gals you want to do deals with. These people over here," right? Reputation is pretty important. Do you see that in the game of private money, fix and flip, rehab, real estate investment? Like, how important is a good name? That's a silly question, but run with it.
Well, I'll start with so there's a city called Quincy, just south of Boston. That's where I grew up.
Yeah.
And I lived most of my adult life in Boston, and then I moved back to Quincy. I have an office building here in Quincy, and I before I was a real estate professional, I was a bartender in Boston.
Ah, cool.
So you get to know a lot of people in the bartending business. I was a real estate broker for a while. When I started lending, it wasn't until 2014 that I started lending. And you need 3 things to lend. You need money, you need borrower base, and you need some sort of infrastructure to manage loans.
Yeah.
And so I had 2 out of the 3. The money part was just not quite there. But some people took mercy on me. Some other local lenders, older lenders that were going to retire, said, "Hey, I'll give you some money," and kind of kickstarted me, which I'm very thankful for. We were successful, super successful right from the start. We had no business cards. We had no website. But we had done a really good job for people. We have a business partner. He's a builder, more silent in this particular part of the business, but just always honest, whether I was bartending or just in Boston's a small, of all towns. I can only speak of Boston because I'm a total, like, I guess I'm a towny local Neanderthal.
Yeah.
But here, it's just a really small, it's geographically tiny. Everybody knows each other. And in this business, as a lender, there's so much opportunity, I think, to be a predatory lender. Because the borrowers don't read the promissory notes. They don't read anything. So there's a ton of opportunity. And I actually think the reason why the original lenders here in Boston, a lot of them are out of business. And the reason is they, to some degree, were like cab drivers back in the day. Like, this cab stinks. Can you wash it? Nope, you don't like it. Get out.
Get
right?
out.
It was like cold. And it's freezing here in the wintertime, right? You're just like, please pick me up. And now, like, you can get an Uber driver and you look and it's like, okay, this guy is a 4, this guy I want, and the Uber driver shows up. He's like, would you like a water? There's some gum in the back seat. Why don't you help yourself? I mean, they're just out here. So that to me is an example of kind of what happened in the hard money space, very similar to Uber, where it got taken over, way more competition, which really helps out the borrower, right, who is the person who's getting the product in this case. So I don't know if that quite explained what you asked, but that was my story.
So that's good. Now behind you, I see a bottle with some glasses. Like what do you have in that? What do they call that? The decanter? No, that's for.
I think maybe. Yeah, I think so. I'm not a big drinker.
Yeah.
But I have some friends that know they drink a lot of scotch or whatever.
Yeah.
So they recommended that I got Balvenie, it's called.
Yeah.
And if you close a deal over $1 million, you're welcome to share and partake in a glass of Balvenie.
All right. So when I help you close a $1 million deal,
I'll send you the whole bottle. We'll do it virtually.
All right. Deal. All right. So there's a lot of cool movies. This is a personal question. There's a lot of cool movies and cool actors that, out of Boston.
Just keep in mind, if you're going to ask me for anything about taste in movies, I have a 1-year-old and a 2-year-old at the house, so you're probably not going to like the answer, but go ahead.
Name a movie that you and I are hanging out and you're like, hey, Josh, let's put in a movie. You might have seen it before, but we just did a big deal. We had a few scotch. We did a bunch, like we're hanging out, we're watching a movie. What movie are you going to pick?
I just started watching. So I have no time to myself, like none. I get up in the morning. If I'm lucky, I get up early enough to go to the gym.
Yep.
I feed the kids. I go to work. I support the staff here the whole day, customers calling, whatever. I go home. As soon as I go home, it's laundry, cleanup, diapers, whatever. If the kids go to bed and my wife allows me to get a little free time, I'll watch Netflix if I can.
Yeah.
And I started watching this. I'm going to age myself, but I just got into watching, and I haven't seen it in about 10 years, though I've probably seen it a dozen times. Apocalypse Now, which is like it's just so classic, right?
Yeah.
And it looks weird to watch because it's not Charlie Sheen. What's Charlie's brother's? No, it's Charlie's the son, right? What's the father's name? Is it Charlie as well? Oh, Martin Sheen.
Yeah.
Martin Sheen, you're right. Yeah, it's Martin Sheen. Martin Sheen is like 30, probably 40 in it. Yeah. It just seems a little weird to watch it now because everybody just, either some of those guys have passed and everyone's so old, but what a classic movie. And I think in general, I do love a good war movies.
Yeah. What a great movie. So Martin Sheen, Marlon Brando, Dennis Hopper, Lawrence Fishburne, Harrison Ford, a few others, right?
Yeah.
All right.
Yeah, and you haven't seen it in a while. You're like, I forgot Harrison Ford was even in it. I was just at that part where I got yelled at and I had to go to bed. But that's my life.
Yeah, I get it, man. I get it. So, all right, here's going to be the challenge. You ready for a challenge?
Please, let's do it.
You have to pull out a business piece of nugget from that movie to share with us.
Oh. Jesus,
that's a tough one, huh?
It is it's really tough, but I'll tell you this. Who's the guy who says, I love the smell of napalm in the morning?
I love the smell of napalm in the morning. I think it's wasn't Duvall, was it?
Duvall.
Yeah.
I don't know about business piece, but if I could be somebody, I would like to be him. He's just the coolest dude ever.
Yeah.
He's so smooth in that movie. He's in the beach and he's trying to get these two kids to go. It's a beach. It's totally like he's standing, everyone else is on the ground trying to hide, and there's bombs blowing up, small bombs blowing up, and there's bombs blowing up in the beach. And he makes two of the guys in his unit. He's like, get out there and surf that. We're not leaving till you surf the beach. And he makes them surf, and he just stands there, and everyone else is kind of running cover. I don't know, I thought that was awesome.
It is a good movie. So Robert Duvall, here's one of my favorite movies with Robert Duvall, Secondhand Lines. Have you seen that?
Nope. So I gotta watch it. Secondhand Lines, right?
Secondhand Lines, right?
Yep.
So I'm not going to give you the whole thing. So there's two speeches that he gives in the movie. One is the meaning of life that he gives to all young men. So good. All right. Another speech, I'm just going to paint the picture. He's in a cafe with him, Michael Douglas, I think, and this young boy. And
how have I not seen this movie?
So good. And
Michael Douglas is awesome. He's great.
I'm pretty sure it's Michael Douglas. I'm trying to remember, but a few hoodlums walk in. I'm just going to paint the picture. They get into a cafe fight. You got to watch it.
Great.
And then before it happens, he says something to these guys. So good.
I got to watch it. I guess, see, now it's so, I'm at the point where it's really like, if I want to see a great movie, it's how long ago have I seen it?
Yeah.
Now you've given me Secondhand Lines, right? Secondhand Lines.
Okay.
Where I have a new movie that I know I haven't seen it because I've never heard of it.
Yeah, it came
unless
out
it's so old that maybe you've seen it, but you forgot the name, but I don't think so.
2010 to 13-ish, somewhere in that neighborhood. All right.
Shoot.
Yeah. So, all right, back to deals. So this is why I love the show, because, we talk about arts, right? So now we sound fancy because we're talking about the arts and entertainment, right? And we could talk about, the libations behind you and spirits and deals. What is your favorite kind of deal, right? You and I are hanging out. We just got some Boston cream donuts in the morning. We did a big deal. We had a little bit of that scotch. We're about to put on Secondhand Lines, but the perfect deal crosses the plate. And you're like, hang on, bro, I got to take this. What's the perfect deal look like for you?
That's a tough question. The easiest deal, I got a deal yesterday, probably one of the easiest deals. So a borrower of mine just showed up, and I was in a meeting in the conference room. I was actually trying to train a couple of the loan officers or just go over some stuff. And I love her, but she's a little crazy. And she just opens the door just doesn't announce herself, just comes right in. And she's got someone with her. And she's like, he's buying a 3-family in Quincy. It was actually, the house is 3 doors down from where I grew up. In fact, I used to deliver the newspaper. I don't know about that house, but the one across the street, all those houses. He's buying it for $900,000. It's as is, doesn't need any construction, and he's putting 25% down. That's the easiest loan to fund. It's a great asset, great borrower, and they're putting a ton of money down. 25% down is like unheard of. Yeah. Everybody is putting, all the lenders are trying to get the least money down, or other borrowers as least money down as possible. That's an easy deal. Yeah. So that's great. But sometimes I like deals that are really complicated, because, and maybe even better, other lenders can't lend on it for some reason. Not because it's a bad deal, they just can't seem to wrap their head around it, the deal. That's my kind of deal. I like to get in there and say, and then it's, unfortunately, playing professional football was just never in the cards for me, but I can get my competitive spirit and get in there and say, nobody else could do this deal. We found a way to keep our investors protected, make the borrower happy, make the seller happy. We consummated that deal. It was so difficult, and we came up with these ideas that were outside the box, close that deal. And then I feel like somehow, I just caught a pass, something like that.
Yeah, the hairy deal, right? The deal that nobody else could do.
Right.
And
you can't have all those deals though. Then it's like, then I don't have any more hair to lose, but if I did, it wouldn't be there. So it's nice to have some easy deals, but I get more personal satisfaction out of somebody, especially if it's a good borrower, and the deal's all twisted up. That's probably that I love to get in there and get dirty and see what I can do.
Yeah. Location wise. So we got Boston and we got Florida are the places
We
that
have
you
we
give
have
these places.
Boston, and then we have Rhode Island and New
Okay.
Hampshire. They're all our neighbors.
Yep.
And then we have a boot on the ground in Connecticut. So we're going to lend in Connecticut as well. And then we're open to lending in Florida. We've recently contacted a closing attorney. We've have fund docs now that Florida is added in. We have our first Florida loan on the board, but I don't have a boot on the ground. I don't really have a loan officer, so to speak, in Florida. If anybody's listening and would like to work with us, we would love to find a boot on the ground in Florida, and we're open to lending there.
Cool. So let's do this. Do another plug. If people want to connect with you, say, hey, thanks for being on the show, and go, hey, Mike, let's do a deal. How can people connect with you right now? Especially if they're in Florida and they're going, hey, man, I want to be that boot, or boots if they have two legs. If they want to be boots on the ground.
They can, sure. They can call me at 617-908-0612. That's my cell phone. You can call or text me. You can go to www.r as in real estate, F as in finance -boston.com, and they can email me at mgarrity, GARRITY at rf-boston.com.
Perfect. Perfect. All right. 2 more questions. You ready? All right. You and I are hanging out, and we could either go to the past or to the future. You get to decide. We could go 20 years either to the past or 20 years to the future. What would you choose?
Can we do a little more? Because I would love to be single in the 70s.
Okay.
Sign me up.
That you're going alone, bro. I'm sending you back to the 70s. The only rule, I have a time machine. I'll send you back to the 70s.
Yep.
How old do you want to be in the 70s? 21?
Yeah, sure. 20. I think 20.
Now
19.
you
Sure,
don't have any hair
21.
right now. But at 21, did you have a good
Hair is overrated. It really is. Not your hair though. You're an exception to the rule.
Thanks. I got good hair. Did you have hair in your 20s?
So when I was about 20,
Yeah.
I went to Cancun, and we had this thing where you would, it was bungee jumping was really big.
Yeah.
When I was 20, it was 1992.
Yeah.
And bungee jumping was really big. And that we all decided to do the bungee jump, and they videotaped us. And at one point, we were hanging out, and I'm watching the video. I'm home now, watching the video of us. Everybody's, taking turns doing shots, and then you go up and you bungee jump, like in Mexico. And totally, right? And I'm like, who's the guy with the receding hairline in the back? I'm like, geez, what? That's me. I was like 19, 20 years old, and I had I looked like I was 40 from the backside. Yeah. And I just started getting like the 5 and 6 head, just out of high school.
Yeah.
And so I just said, you know what? It's coming off.
Yeah.
And I've been bald since, and I just go with it. Yeah,
no, hey, you're a good looking dude. I'm taken. So sorry, but like you're a good looking dude. Like bald works for you. My business partner's bald. Like I think bald's a good thing.
Yeah, I could double for Mr. Clean, I think, at times. Or maybe Lex Luthor, either one.
All right. So I send you back. You're 20 years old in the 70s. Besides doing all the crazy stuff you want to do in the 70s, what would you buy? I send you back with $100,000. You get to buy one asset in the 70s or 80s, right? Like you get one.
I wouldn't buy anything. I would waste it all. But anyway, let's play a game that I've already wasted the 100 or more, and now you put a gun to my head and say you have to spend this money wisely.
You got to spend the next 100. Okay, so you come back and you go, bro, I went broke. I had a great time. Here's some stories, right? And I go, oh, that sounds interesting. And then I send you back. I go, all right, this time $100,000. You get to buy one thing, right? So whether it's $1, has to be one thing. It could be any asset. Somewhere in the 70s, what were you going to buy?
Well, I mean, I think, this is such a lame answer, but I think, I'm going to go back and look and see what stock went up the most and just buy that, right? Yeah. So I can take that and retire. But I'll tell you, I don't know. I honestly, I probably wouldn't want to buy anything. I would want, if I'm in the 70s, And could I take the $100,000 and like hang out with John Travolta for like a weekend in Vegas, like
Oh
and
my
pay him
gosh.
to hang out with me, like right after he did the movie and he was like the most popular guy on the planet? Like
Yeah.
that's I think I'd like to do.
You'd want to go right before he became famous and become his buddy and be like, oh yeah,
Right.
man, you need some money? Here you go. I'll bankroll you as your and then he makes it big. You'd be like, hey, I knew this was gonna happen. I'm calling in a favor. Right? Gosh, what's your favorite Travolta movie?
I think I think you have to go Staying Alive, right?
Mm.
And people hate that movie, but that's a classic. He's been in a lot of bad movies, I'll tell you that.
Did you like yes. Did all right, you had to choose Pulp Fiction or what's that movie?
Oh, a
The,
Pulp Fiction. I don't think anything can stand Pulp Fiction.
it's
One
pretty
of the
good.
greatest movies of all time.
Or Face Off. Sorry, Travolta and Cage.
I don't
Uh,
think I don't think I watched Face Off.
you're not missing much. Once again, and Travolta actually lives near us
John
here.
Travolta is such a cool guy, but like he's really only done probably Pulp Fiction and Staying Alive. Every other movie he's done was probably terrible. Let's just
What,
be honest.
what's that movie? Go Grease Lightning, go.
Oh, right, classic. Yeah,
That's I forget.
I think it's
forget.
Grease.
Grease. All right,
Yeah.
that was a good movie.
Yeah, fair. I will give him 3. I'll stop poo-pooing all over John Travolta. I'm gonna get more hate email now.
Yeah, but hey, your boy in Boston, Mark Wahlberg, and there's some great movies that came out of Boston, The Departed and such like that. So
Mark Wahlberg has almost every movie he's done is a really good one. And my favorite one, and I know the name of it, is the one when he played. It's based on a true story about the guys that went, and it's another war movie, but they went to somewhere in Afghanistan, and they lose their comms, their Navy SEALs. This is a true story. There was like 4 or 5 of them, and they ended up fighting an entire troop or battalion, not battalion, but 30, 50, 100 Taliban, and he's the only one that survives.
Lone Survivor.
Lone survivor. And because I've listened to the guy who actually survived, and if you want a great podcast other than this one, which is obviously
This is the best today.
No question there, right? But listening to him speak is just, the guy is so inspirational.
Yeah,
the guy who Mark played in that movie.
All right, do you know him? Can you do an intro?
I don't. I'm a terrible with names, but I'm sure you could Google Lone Survivor True Story and figure it out.
That's awesome.
Oh,
right.
do I know him personally? Yeah, no, I'm not.
All right, so now you just been hanging out with Travolta. You're back in the 70s. You're having a blast, and you get when you see yourself, you actually get a bump in yourself, but you don't know that it's actually you from the future. And you could give yourself one piece of advice. What piece of advice would you give yourself? A younger self, maybe. So you're the Back to the Future Marty is the the 20-year-old guy, and you get to go back and give him a piece of advice. What would you tell him?
Well, I'm going to start. I've made so many mistakes in my life.
Yeah.
And I was a immature, stumbling around just until I was 32 when I had my first child. I don't know if I would really do anything different, because I think it made me a better person and more appreciative. But I would try to a little bit, maybe to say, get your life just a little bit more squared away when you're a little bit younger. Don't wait until you're 32 to start, actually trying to, make something out of yourself.
Yeah, got it. Cool. So this has been fun, Michael. Thanks for coming on the show. Ladies and gentlemen listening in. We went all over the place, and that's the awesome side of this show that I get to do and that you guys could be a part of. If what Michael was chatting about, and if you're working on a deal, like in Boston and in the surrounding, places up there and in Florida, if you're looking for a deal and you're doing a fix and flip and you want to chat with someone or maybe have some parachute money or bridge money working on a deal, head on over to RF-Boston, or freaking, man, he gave you his cell phone number. Give him a shout and say, hey, heard you on the Deal Scout. Let's do a deal together. And always reach out to our guests and say thank you. Till then, let's talk to you guys on the next episode of the Deal Scout. Talk to you all later. Bye-bye.